Hello, I'm Bernard Hickey from interest.co.nz and welcome to a special investing report brought to you in association with the BNZ. Today we're going to have a look at one of those key variables in the economy and for investors, which is the Fonterra payout. Now back in the good old days, there used to be just one number to look at, and that was the milk payout. And Fonterra used to forecast what that number would be. And it was an amalgamation of quite a few things. Firstly, the wholesale milk price, because obviously the price of milk that goes to Fonterra is bought, and then there's the profits that Fonterra makes by processing that milk into cheese and butter and whatever, and then selling it to consumers in the form of finally made up goods. So, in the last few years there's been a change in the way the payout's been announced and its makeup to include what's called the wholesale milk price, or the pure milk price, which you get for your milk on its own, and then what they used to call the distributable profit, or the value add. And that was supposed to include all the profit that Fonterra made. But that's changed over the last couple of years as Fonterra has looked to tweak its capital structure. So now we have what's called the milk price plus the dividend that people get with their Fonterra payout, or shareholders and farmers get anyway. Used to be called the value return, now it's called the dividend. Well, today Fonterra announced some changes in the makeup of that payout. Essentially the payout, the total payout to farmers is unchanged at around about $5.90 a kilogram for the current season. That works out at about $7 billion all up for the New Zealand economy, so and obviously one to watch closely. But Fonterra have said that their distributable profit, the amount of profit they're going to make from selling their goods, from selling off assets, from joint ventures they've got, is going to increase by around about 5 cents to around about 40 to 50 cents per kilogram. However, they're not going to add that to the payout. Instead, they're going to leave the dividend unchanged at between 20 and 30 cents a kilogram, and they're going to increase the amount of cash that Fonterra retains to beef up its balance sheet by 5 cents to between 10 and 30 cents a kilogram. What's the big picture here? Why is Fonterra choosing not to pay out all of its profit and its returns from milk sales to farmers? Because normally they like it all back. Well, Fonterra has a lot of debt and it needs to reduce that debt, and has been working hard over the last couple of years to do that. A couple of ways you can reduce debt. You can ask shareholders for more money in the form of equity, or you can retain profits, and that effectively is what Fonterra is doing. At the moment, Fonterra is also looking to raise some money through debt issues to retail investors in New Zealand. It has a bond offer around at the moment, a 6-year bond offer for up to $150 million. It's offering 6.83%. And this news that Fonterra is going to retain more of its payout is going to beef up its balance sheet and makes those bonds marginally more attractive. So there we have it. A slight change in the mix of what Fonterra is going to pay out to farmers. Total payout unchanged, around $5.90 a kilogram, but certainly one to watch if you're looking to buy into those Fonterra bonds. I'm Bernard Hickey. That was a special investing report brought to you in association with the BNZ.